Lest you think I'm saying that there is a fresh up move in place. No, what I'm trying to say is that if there's a breakout above that level, then there'll be a fresh up move on the Nifty, and I'll get to that in a moment. First, the global news flow, the the developments or the worries over the weekend about a missile that struck Poland, uh, being Russian made, and therefore what would it do to geopolitical stress? Well, NATO says that the missile that struck Poland wasn't a Russian attack. So that's that. The US 10-year yield is now at October lows, 3.7. Oil has fallen as the Druzhba pipeline has reopened as well. And if you look at all the global websites, including Bloomberg.com or BQ Prime, you will see that China is sounding a much more pleasant tone than what it has in the recent past. So that too should be construed positively from a geopolitical perspective. Did it help the US markets? Though not really. The US markets actually came off in trade yesterday. And that's the nature of the beast of late. It's very, very choppy and volatile, almost impossible to trade from a very, very short term perspective. Maybe very, very difficult to trade from a positional perspective too, but certainly very short term perspective becoming very, very difficult. Stop losses are getting cut left, right, center. The US markets is an example, but our markets are no different. The 10-year yield, as I said, is 3.7. So that's the land highlight of the next piece, 3.71. The dollar index at 106, CBOE VIX at 24, hardly any moves there. The SGX Nifty should be slightly lower, I reckon. The US futures are not exactly in the green either. Yeah, about 70 odd points, 18,410. Pretty much like yesterday's session, to be honest. So that's the trade setup, right? I mean, the current market texture is non-directional, and you can figure it out in the trading in the last few days that it's very, very non-directional. A fresh uptrend is possible only after the 18,450 breakout level. The prevailing underperformance of the broader indices continues to weigh in on the sentiment. Real estate, pharma likely to continue drag moves in the very short term. There's this article that will get published on BQ Prime today. It's a series of articles being written, which are being penned down by Vaibhav Sanghvi of Avendus, titled Quantamentals. And in that, I'm giving you a bit of a sneak peek into it. Um, Vaibhav Sanghvi is showing with data how, in cases of higher rate trajectories, real estate has been a rank underperformer. Never mind what's happening to sales, etc. It doesn't perform well, and I think at least history says that. And I think the recent performances, never mind what's happened to Keystone IPO demand, the recent performances of the real estate stocks are probably testimony to that. So real estate pharma likely to remain underperformers, so to say. Um, Oh, we published it already. Okay, I didn't know that. But yeah, it's a very well written, very simple to read article by Vaibhav Sanghvi of Avendus, but it's titled Quantamentals, and 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 that's the long and short of this thing. It's a mix of fundamentals and quantitative analysis, and there's a table below which will give you an indication of what he's trying to say. Good read, really, if anybody wants to do that. Okay, let's move on to the stocks to watch. It's a very labored market, so there's not much to add on the trade setup. Frankly, like I said, the world markets too are very, very quiet. Not too many stocks as well, I'm afraid, but we'll try and get you some brokerage opinion, some analysis. So first, Paytm is arguably the biggest stock of the day to monitor. At the open, that is SVF India Holdings, which is a SoftBank unit, will sell Paytm shares at 555 to 601 each in a block deal. The price range indicates a discount of up to 7.72% against the closing price, and will sell over 29 million shares, which is about 4.5% of the entire shareholding. So that's a large block in a space which doesn't necessarily have too many buyers at a premium. Suffice to say, I would reckon that Paytm would trade at a discount today. Some stocks in news include a Hindustan Zinc, DLF, and Orcon International. So Hindustan Zinc and Vedanta, because Hindustan Zinc will pay an interim dividend of 15.5 rupees per share. DLF, because the Adani Realty, DLF, and Naman Group are a trio which are in race for Dharavi redevelopment in Mumbai. And that's a big one, by the way. Whoever wins it, great for them. Orcon International, it's emerged as an L1 for construction of balance work of Bahuti Canal project in Madhya Pradesh on a turnkey basis. afraid. I don't quite have been. I haven't been able to get a sense of what's the size of this, but be that as it may, um, it could be an interesting one. So uh, let's see. That could be an interesting one. Um, amongst So by the way, since we just spoke about Hindustan Zinc, let's get the city view on Hindustan Zinc first out of the way. They are neutral, of course, on the stock. They're saying that, of course, the company's announced that second interim dividend, which is a cash outflow of about $1 billion. The total dividend for FY23 thus far is therefore 36 rupees, implying a payout of 147% estimated and cash outflow of 1.9 billion. It trades at about 7 times 1 year forward EV/EBITDA versus averages since 6.5 since FY16 when the payout rose. So kind of being in the price as well, and which is why I think Citi is saying that they are neutral on Hinzing. Some bulk deals included Bikaji Foods, wherein Goldman Sachs equity portfolio bought about 17.45 lakh shares, or Global Health, wherein Nomura India Investment Fund Mother Account bought about 15 lakh shares, or FSN E-Commerce Ventures, wherein Lighthouse India Fund 3 sold about 3 crore shares. Remember, Nykaa was in a lot of pain in trade yesterday, or not a lot of pain, but certainly was a bit subdued in trade yesterday. Now we know the reasons why. In fact, let's bring up the table of the top volume buzzers, and you will see Nykaa's name there. No, okay, I missed out on Nykaa. There was one more. That was one more stock. But okay, the price volume buzzers have some other names out here today. Um, 4 winners, 1 losers. The loser was Metropolis, 7.7% down. The gainers included a Hutco, Atul Auto, Texrail, and HAL. And it was not just HAL, by the way. A bunch of other defense-led names had a pretty strong outing in trade yesterday. So that's certainly a pocket that is finding some takers for sure. Stocks that have missed out today, um, maybe Union Bank of India. Srinivasan Vardarajan has been appointed as the chairman. Srinivasan, of course, was the DMD or Deputy Managing Director at Axis. So maybe I missed out on Union Bank. Could be an interesting one to monitor today. There is also news flow about how the JLR CEO has resigned, but I would suspect that unlike some of the other companies which are so CEO driven, JLR, large group, robust ecosystem. I don't know if this announcement has a big impact on the Tata Motors stock or no. I would suspect not, but yeah, let's wait and watch. So that's one more name to monitor today. Some brokerage notes, and I think first, Kotak Bank was very active yesterday, and therefore the Morgan Stanley view on Kotak Bank. This is feedback from the Asia Pacific Investor Summit. They are equal weight with the target price of 2215. They're saying that the key takeaways from that meet: the margins have improved sharply over the past year and should continue to improve. Moderation is expected only in FY24. Does that give you an indication about deposit rates? Who knows? Loan growth remains strong with no significant moderation despite higher interest rates. Operating costs remain elevated, but the asset quality is benign and the best it has been in many years for Kotak Bank. It's very active yesterday, Kotak. In fact, one of the reasons why Bank Nifty made a bit of a fighting comeback of sorts, 2.5% up on an otherwise very, very dull day. Uh, and therefore, it was important to bring you the Kotak view. The other thing was an interesting note from systematics on pipe companies, simply because if you heard the conversation with Astral or any of the other companies, the PVC prices have come off so much um, that the eventual product prices are grinding lower. And therefore, this note was interesting. There's a bunch of retail investors in pipe companies, and I thought I'll bring out the view from Systematics. So they're saying that the volumes, both YOY, QOQ, are flattish in PVC pipes, which was encouraging for them despite that channel destocking. The margins should normalize by Q4 once the high cost inventory is liquidated. They expect stable and affordable PVC prices to boost demand for agri pipes, post the flattish volumes seen over the last 4 years. To their mind, Stylam, Prince, and Apollo pipes are their top picks. But while Systematics has done this analysis, yes, Securities came out with some channel checks which were interesting. Reliance apparently has rolled over PVC prices. They've not increased them at all. PVC prices are already down about 9 rupees per kg in October and November, and hence the inventory losses for the pipe companies are very likely to continue in Q3 as well. And though lower PVC is likely to boost demand, as systematics was also saying, as per yes securities channel checks, the pipe demand continues to remain sluggish and dealer inventory is still at low levels. So, viewers, the point being, quarter three seems to be a washout. Quarter four, there is hope, but you don't know for sure. So therefore, be mindful of that if you are looking to invest into any of the pipe companies. Maybe, just maybe, there's still some more time before the tide turns for these names. So that should be kept in mind. Okay, so that's the long and short of the trade setup today. But a bunch of very interesting conversations lined up. Since we're talking of charts, I would look forward to the Lawrence Blanco conversation today at about 11:30. So that is something that I would watch out for. Ganesh Ram Jayaraman of Spark Capital talks at 10 a.m. to us. And of course, the mutual fund show has two very interesting conversations about what should people do if they don't want to do lump sum investing. What are the SIP possibilities? And on the debt side as well, what are the options currently compared to what the scene was about a few months back? So, set of very interesting conversations lined up. You might want to tune in for those. Thanks so much for tuning into the Trade Setup today.